Hello and welcome to Africa Business Weekly, your weekly dose of business stories across the continent. I'm your host, Akin Obakeye. Now, on today's show, we'll be looking at what's happening. And first of all, in Namibia. Namibia is in the news as the country's exchange is undergoing a transformation. We'll find out what this transformation is all about. And in East Africa, we look at how Ethiopia has officially launched its trade in goods under the African Continental Free Trade Area. A positive development, if you agree with me. And in Central and West Africa all seem set for Cameroon's election as the country heads to the poll on Sunday to elect a new president. Will Paul Biya continue, or will there be a wind of change? Well, let's dive into this week's discussion as we join Karabo, who's waiting to give us feelers from the city of Johannesburg. It's over to you, Karabo.
A very good evening to you, Akin. The Namibia Securities Exchange is undergoing transformation with an ongoing process of rebranding from a stock exchange to a securities exchange. Sustainability remains a focal point with activities in sustainability bonds and efforts to create more pragmatic ESG compliance standards for African markets. For an update on the state of the exchange, CNBC Africa spoke to CEO Tian Bazane.
We've made a lot of progress. We're waiting for the Financial Institutions Market Act to be announced into operation. That creates the legislative framework for that. So the branding was the easy part to do initially.
All right. And just remind us again, big picture, in terms of what it is you are trying to achieve with this process and what it is you're aiming to get.
Well, it's best practice these days to move away from the association model and become a company, ideally to list on yourself and to make your shareholding available, as we want all the other companies to do as well. So it moves it away from the members association. In the old days, the stockbrokers to a large extent controlled the exchanges, which was somewhat incestuous and unhealthy. But that's not the case. We've already corporatized, but just taking that next step to become a company.
Yeah. Tian, so you come to talk to us on a day where we're at a record high. You've got markets in most parts of the world continuing to strike new record highs. In fact, it has been a good year for most markets the world over, notwithstanding the uncertainty that we started the year with. Your sentiments and reflections of the Securities Exchange and how the year has panned out so far?
It's a game-changing year. AI is creating, as you called it, an arms race. I like that term. We're seeing energy demand is going to go through the roof, which means partially many commodities also will probably benefit from that. Gold is going up, maybe because of some of those insecurities within those positions. And also you've seen a devaluation of the dollar, which is you've got rand strength on the one side, but you've also got dollar weakness on the other. So it's very interesting times. I mean, we're seeing wonderful results from our Namibian companies. Our index is also at an all-time high. The American markets are an all-time high. Everything's running on full steam, but everybody's very worried, because this one calls it a bubble and the other one's concerned about the market running too far ahead. Yes, there's always risks, there's always concerns, but the bottom line is currently things are looking pretty good. Yeah. My biggest concern would be the energy requirement for what this fourth industrial revolution is going to require.
Sure. And
I don't think the answers are all there yet.
If we talk about energy, I do know that it's probably a conversation that you have been having in your visit here in South Africa. You were attending a conference, and when we talk about energy, we talk about Namibia also being part of that solution. The gas, your oil discoveries, and there's a whole lot of excitement in that regard. Maybe you can just bring us up to speed with what you have been discussing with your counterparts so far this year.
Sure. So on the oil side, I think that it's pretty clear there's a vast volume of oil. What is required next is basically for there to be a regulatory framework that's sufficient for the internationals to make the final investment decision. That FID basically requires them to know that the rules of the game aren't going to change a couple of years down the line. They've done this throughout the world. They know what they require, and that some of that might need regulatory or legislative changes, but they want to know that the tax rate is going to stay stable, everything around what the investment would entail, not to change over the period.
Yeah.
Then, of course, it looks like small modular nuclear reactors are on the horizon. That has an impact on the uranium market, which Namibia is already a substantial producer of. And I see a lot more of those projects that may have been mothballed after Fukushima probably becoming viable again. So we're probably going to see an uptick in that as well.
The mining sector in South Africa, noted for its abundance of natural resources, represents what Akiani's Prashant Reddy described as the last frontier of the world's mineral wealth. While geopolitical considerations and protectionist sentiments such as Trump's America First exist, Reddy urged an Africa First approach, and this is against the backdrop of the Joburg mining indaba, which took place earlier this week. Let's listen in.
I don't think it's about what has changed. I believe it has more to do with what is the opportunity. Certainly what we're seeing in the mining space, as you would have seen with the gold price of recent, but also in the platinum group metals, in the coal sector, there's been a number of course, quite well-priced commodity markets at the moment. And there's a lot of opportunity to support the development and industrialization that is needed in our country. But also we've seen the developments on the rail and port side. We've seen the developments in the power sector, which are allowing us to create an ecosystem to further look at industrialization in a more meaningful way, not just in the beneficiation space, but also in the supply space to the mining sector.
Absolutely. And I'm going to come back and give you an opportunity to lay out your thoughts in terms of how that industrialization and also how beneficiation plays into the whole thing. But I wanted to say to you, as you can see, I've been around a little bit, and I certainly remember the arguments that have been advanced in the past about how companies should not be dictated to in terms of who and where they sell their product. So I wanted to ask, you speak of opportunity, but what about also the fact that we have a geopolitical environment that is speaking to countries specifically saying, you look at us first before you look at other people. Of course, I'm referring to the America First story. Is that helping a little bit in coming around to this kind of thinking?
I think at the end of the day, Africa and South Africa are the mineral-rich, let's say, last frontier of what exists in the world today. A lot of the world has been overmined over time. So a lot of what mineral wealth sits within the continent, and we are, I would say, undermined. In fact, I don't think that our context means that we have completely exhausted the mineral wealth that the continent has. So we certainly are in a position, I would say, as South Africans, but also as Africans, in terms of the mineral endowment, which means that yes, there might be geopolitical agendas at play. But I think what is most important is thinking about Africa first and South Africa first, around how we further industrialize, beneficiate those minerals for the benefit of the global economy, but also our local and regional economies. And at the same time, I think it's really about putting the South African agenda first as well.
I love it. I love it. I love your message. So let's talk about what you are proposing, because you have been talking on, I quote directly here, mining and beneficiation is a catalyst for the reindustrialization of South Africa. And I suppose add that after South Africa, you can add Africa. So how does that look like in your view?
I mean, Godfrey, what we must also realize is this is not the first time as South Africans we have had this opportunity and conversation. Beneficiation, of course, as we know, has been on the agenda for a very long time in the mining sector. But not only that, in the early 1900s, in fact, South Africa, of course, built a manufacturing base around the gold industry boom, around the coal power industry that supplied that boom, the steel industry, then the manufacturing that grew from that. So you can tell that we have a history of looking at our commodities and trying to understand how we further industrialize our country. And in fact, we've deindustrialized over time as we've entered the global competitive nature of markets and economies. We've seen manufacturing move all over the world and further beneficiation move all over the world.
And those were just a few of the major stories down south for this week. But until next week, it's back to you, Akin.
Many thanks there, Karabo. Let's join Tabitha now in Kigali as she gives us updates from East Africa.
Hello, Akin, and good evening to our viewers. This week, Ethiopia officially launched trade in goods under the African Continental Free Trade Area on the 9th of October 2025. At the same time, the central bank raised credit growth caps to 24% while keeping the policy rate at 15%. We spoke to Mered Fekere Yohannes, analyst and CEO of Pragma Investment Advisory, for more.
The market, was expecting that the policy rate is going to be maintained at 15%. 15% rate. There's no, the market was expecting that, and that's what the MPC delivered. However, I think that overwhelmingly the market was expecting that the MPC will remove the credit cap, which has been set since August 2023, to put a credit cap on the credit cap on the banks. It was expected to be removed. However, the MPC expressed on its note saying that we still expect that inflation to be subsided, and however, they will still maintain the credit cap. But in terms of one thing they decided is they will increase the credit cap, which was previously 18%, and they increase it up to 24%. So the market was not expecting that. However, the MPC on its notes say that they are still committed to remove the credit cap, and then more importantly, they expressed that Ethiopia is strongly working to implement the new monetary policy system as it transitioned into from the old system where you have to set a credit cap into a new system where you will use the new policy rate as Ethiopia moves forward. So in our view, I think in the coming December meeting, it is expected, at least on our end, it is expected that the MPC would remove the credit cap, since the interbank money market lending activity has reached almost 1 trillion birr, that is close to 1 trillion shilling. So at least the interbank money market is taking a good foothold, which would make it easier for the central bank to move towards interest-based monetary policy.
Yes, indeed. And what can you say are the factors that are contributing to this credit growth cap here? And also let us tie that with inflation and liquidity, saying that maybe higher credit cap fuel could actually fuel inflationary pressure, and also current liquidity environment maybe supporting sustainable credit expansion at the same time.
Absolutely. So, when the central bank first implemented the credit cap back in August 2023, they were sort of preparing the way for Ethiopia to float its currency, to introduce the new macroeconomic reform plans, right? That was the intention, to reduce the credit activity within the economy, and more importantly, to reduce inflation. 2 years ago, mind you, the annual aggregated inflation rate was around 35%. So since then, since they implemented the credit cap starting from 14% and moving it to March 2025 to 18%, right now 24%, inflation is sort of subsidized, sort of reduced significantly. So in their meeting, one thing they expressed is that last month's August inflation rate is up to 13.7%. So their goal is by June 2025, they want to reach a single-digit inflation rate. That's their goal. That's the goal of the central bank. So until then, their intention is we will still continue implementing the credit cap. However, we would reduce the implication by increasing the credit cap from 18% to 24%. So still the main goal is, from the central bank perspective, is by June 2025, their target is to make inflation a single digit. That's the target.
And right here in the heart of 1,000 hills, Rwanda's ICT sector has become the country's second biggest growth driver after services, powering innovation, startup activity and job creation. Now here's more from Alex Intale, CEO of the ICT Chamber.
The biggest milestones are still ensuring that we have a digitally literate population. And that is, since we're talking about economics and markets, and that is mostly working with MSMEs, SMEs, as well as some of the big manufacturers and producers to look at their digitization needs and gaps, and making sure that we close some of those. In doing so, we are sure that we'll be able to increase those opportunities in terms of jobs, but also provide more visibility that enables companies to be actually funded or access funding from different types of investors. To date, since the year began, we've been working along 4 main value chains in the digitization journey, and that is in agriculture, trade, tourism, as well as not so much energy, forgotten the last one, education. Are really trying to see where are the gaps, and so far we are working with over 630 plus MSMEs, and together with member companies that are helping in this digitization journey. So those are some of the milestones. The journey is long, but what we aim at here is really creating champions that can have a catalytic effect on the rest of the digital economy, and that number is growing.
And to quantify this success, what are the metrics that you're looking toward achieving in these 4 critical sectors that you just spoke of?
So there are big ambitions, but where we're looking at growing that. So we have a metric that we use for digitization, digital maturity assessment for businesses, looking from supply chain down to distribution or access to markets, as well as the other enabling elements like access to digital finance. So the biggest milestones, yes, is digital literacy. How do we go from 53% where we were at in the last NST1 to 100%. In the private sector digitization, we have seen a lot of penetration in the financial sector in terms of digital financial services that has grown, and the last Finscope assessment showed that we were at mobile, basically mobile was enabling us to get to 96% coverage in terms of digital financial services. That is kind of different from digital banking. Digital banking was still at 22%. So what we want to see is increasing access to credit from both, yes, the non-bank lenders, but also going back to, that is enabling fintechs to build on top of that. So fintechs, the target is getting up to 200, raising or attracting over $200 million in the fintech sector over the next 4 years now. Time runs out quickly, but growing also that community beyond just digital payments.
That's it from here. Back to you in the West.
Quite an insightful conversation there, Tabitha. Meanwhile, in Nigeria, the country's Minister of Finance and Coordinating Minister of the Economy, Wale Edun, has restated the commitment of the President Bola Tinubu's administration to lift millions of Nigerians out of poverty, while stressing that the growth momentum so far has been driven by job-creating sectors. In an exclusive chat with CNBC Africa, Nigeria's Finance Minister notes that more reforms will be implemented. Take a listen.
It is important that the benefits of reform, that the gains of reform do feed down. But the first thing is that investors have to be ready to come in and invest because they find the investment environment attractive. Whilst we look at the figures, the data, which we must be guided by, in the second quarter of 2025, yes, the overall GDP growth rate was 4.23%. But when you look at the all-important industrial sector, the job-creating sector, that shot up by about 7.45%. And in fact, it doubled from the first quarter. So these are the very important indicators that not only is the growth that is being engendered by the macroeconomic framework, by the incentives that are in place, but it is growth in the right direction. It is job-creating growth. And that is definitely the objective. And in terms of inclusiveness, yes, we want rapid, and we are getting rapid. We want sustained. Over so many quarters now, we have had growth. And you have to remember, in an environment where the monetary authorities and indeed the fiscal authorities join hands to fight inflation as the worst enemy of the whole society, particularly the poor and the most vulnerable, you don't normally get growth. And because interest rates are high.
Yes.
And we all know that it is when inflation comes down that the monetary authorities will have the leeway to perhaps bring down interest rates, make them more affordable. But in the meantime, people are taking out their equity. They're taking out their savings. And they're finding sources of funding for the attractive business opportunities that they see. Let me not fail to say that at the grassroots level, in order not to just have growth at the high end, the large companies, even the medium-sized companies, we want Nigerians, micro enterprises, cottage industries to participate.
Yes.
And that is why the National Economic Council did approve His Excellency President Bola Ahmed Tinubu's World-Based Development Program. The Minister for Budget and Economic Planning is spearheading that initiative, which will take financing, support, encouragement, and access to resources to the 8,809 wards throughout the length and breadth of Nigeria, so that you can see that the smallest of enterprises, the cottage industries, will have a chance to participate in the transformation of the Nigerian economy. And they have what they need. Access to foreign exchange is available to them. A open market where they don't need a license or a special permission in order to participate.
And in Central Africa, Cameroon heads to the polls on Sunday to elect a president. And the question on everyone's mind is if President Paul Biya will extend his 43-year rule. Meanwhile, support for opposition candidates Issa Chimai Bakari appears to be gaining momentum. Vincent Roguet, head of Political Risk Africa at Control Risk, joined us earlier to unpack the political climate and assess what to expect ahead of the elections this weekend.
Our base case for this election is continuity, and the main factor underpinning this assessment is the dominance of the ruling party, the ruling camp. Even despite the fact that Biya has been largely absent from the campaign, we saw him running his first campaign event only this week, and it was the sole public appearance, as in 2018. And you're right to point out that, on the other hand, we've seen the opposition, and particularly Chiroma Bakari, run quite a spirited campaign, draw fairly large crowds at rallies, and also dominate social media. But that still doesn't really is enough to counter the dominance of the ruling party over administrative structures, the patronage networks that they're able to bring out the vote, and ultimately ensure that the outcome is Paul Biya's re-election. So we still think an upset is extremely unlikely.
Definitely a really tough road ahead to unseat Biya. But for President Biya at this moment, this isn't just about winning another election. It's rather to prove to the domestic and international audience, really, that his role carries legitimacy. Do you share the same line of thought?
Yeah, I mean, Cameroon is always particularly sensitive to its international image. And, a big part of Biya's claim to legitimacy has been that in a region that has experienced turbulence, his regime and the survival of his long-term regime has been a factor in preserving Cameroon overall stability. Now, that line has been there for a while. On the other hand, the longer and the more uncertainty we have about the succession to President Paul Biya, I think the more the optics in the international picture is also starting to shift, and there's real question marks over what happens next. And in many ways, it's not so much about the outcome of this election, but rather the 5 to 10 year outlook, and how Cameroon will navigate a period of uncertainty that comes from complete absence of any succession planning at the moment.
And then let's talk about 2016 as well now, the sort of scenario we saw play out, especially in northwestern and the southwest regions. And when we count down to Sunday, it's really a case scenario of being torn between civic duty and security concerns. Also, when we've heard from others who've described these forthcoming election as a day of ballot and bullets, do you think that also provides the right description? And when we're looking at security risks, how do you think the country might be able to pull through, especially on some of the concerns being raised as to how the electoral umpire has managed situations up till now?
Yes, I mean, there's several maybe strands to unpack here. So first is the reaction of the electorate in the larger cities on the francophone speaking regions, in particular the capital Yaoundé and the second largest Douala. There, the question we have and what we will be looking is the reaction of the opposition figures when the results starts coming in, and the potential that if we see early results sheets showing some strong momentum for the opposition, then the authorities could react by cracking down on social media, throttling internet, and you could set up a bit of a slightly worrying dynamic of unrest where opposition figures will maybe try and mobilize in the streets against the outcome. In the Anglophone region, so northwest and southwest, it's a different picture. There we've had an insurgency since 2017 that has really festered. And the longer it has dragged on, the more we've had violence turning against civilians. And you pointed to various ghost towns or lockdown orders by separatist groups, basically telling local populations not to go out to vote and not to participate in this exercise because they don't recognize the legitimacy of the government. It's likely that we're going to have more of these cases of intimidation, potential violence against some electoral officials in these regions. But in any case, participation in these regions will be very subdued because of that worry.
And this is where we draw the curtains on this episode. Thank you for joining us on Africa Business Weekly. You can catch all these stories and more on our website on cnbcafrica.com. Until next time, stay informed and stay ahead. I'm Akin Obakeye. Thank you for watching.